Is now starting. All attendees are in listen-only mode.
Hello, everybody. Welcome to the February 8th edition of Office Hours. I'll be your host, Jamie Hodge, and as usual, I got Steve Gomez in here riding shotgun with me. What's up, Steve?
Hello, Jamie. Happy Monday to you.
Happy Monday to you, and happy Monday to all. It was a pretty good Monday out there. A couple of different fronts. In any case, I think Scott had a meeting or something to tend to, and he usually walks us through the opening paces here, but in the absence of Scott, it's just myself and Steve. So obviously there will be no polls being given today. So I guess having said that, all right, I can see everybody making comments. So that means that you can see the screen and hear us okay. Thank you, Randy. Thank you, Mike. Thank you, Marlon. I see your question there, Marlon, about the RVOL information. Yeah, and we'll have to get you on that list for the trade of the week. Okay, ladies and gents, I'm a little bit out of my element here. So without further ado, let's go ahead and get on with the show today. Got a nice little crowd showing up. So before we get kicking here, just want to take a brief moment to get through the disclaimer and let everybody in attendance know that whether it's this webinar or any of the other webinars that we have coming at you during the week, just keep in mind that all the information that we share with you is for educational purposes only, meaning if you need investment advice, what to do, when to do it, what instruments to buy, what instruments to sell, please do yourself a favor and find someone who's licensed to do that for you, like a registered investment advisor, Series 7 licensed stockbroker, just someone in the field that's licensed and can legally dispense, buy, and sell information to you, because we share this info with you for educational purposes only. All right, I think that'll make the lawyers sleep well enough tonight. And moving right along here, just like to take a little bit of time at the top of the hour, especially for the new folks, to let everybody know about the community that we've fostered around the tech that is TI Pro. Barry's Trading Room, okay, hosted by Barry Anderson up here. Barry opens the doors 30 minutes before each open. So it's a great place to go, whether you're a beginner, intermediate, or advanced. Been having record crowds in there. Barry does an excellent job at moderating a room of that size. So you can get a lot of good information in there. You can learn about trade ideas. And when Barry's not involved in a trade, he's more than happy to answer questions about the tech. So get on in there and use that resource, since it is free and you don't even have to be a subscriber to use it. You got myself and Steve at the 5 p.m. Eastern slot on Mondays. Steve's going to take the steering wheel on Tuesdays with Trade of the Week, and he's going to ride shotgun with him. And of course, Wednesday rolls around. We like to change it up just a little bit, bring in the CEO and founder, Dan Merkin, along with our Chief Technical Officer, Mr. Brad Williams. Always interesting with those two, typically giving you a peek at new features coming down the developmental pipeline. Thursdays, Andy's going to round out the 5 p.m. Eastern webinars with the Trading Studio, and I'm going to ride shotgun with him. And of course, our ever popular daily support session, been having record crowds in here as well. Every Monday, Tuesday, Wednesday, Thursday, Friday, starting at 12 p.m. Eastern and going until 1 p.m. Eastern. Great place to get your issues or your questions addressed in real time with a visual. And one of us trainer types in there to answer your questions. And here's how you get to that daily support session. You'll notice the URL in the bottom left-hand corner. That is a static address. So once you bookmark it, you can just go back there each and every time, same bat time, same bat channel, trade-ideas.com/live. And in addition to that, as far as educational resources go, we have the TI University series, which you can access from our Trade Ideas YouTube channel. Everything from beginning 101, intermediate 201, 301, and advanced going on in 401 here. So once again, this will really help you get over the learning curve a lot quicker than if you don't watch these videos, so take advantage. And just always like to give everybody a peek at our growth, okay? 2016 being the year we brought the first AI module online. Of course, we were already experiencing some nice growth. And since that point in time, year over year, a little flat period here in 2018 and 19, but off to a roaring start since 2020 is over. I guess we need to add another bar here for 2021, but I would expect this trend to keep on going based on what we've seen thus far. Looks like that trend is going to continue. In addition to that, we've also had large influx of new traders into the market due to the macro events that are unfolding out there. I think you all know what those are. But the bottom line is lots of good stuff coming down the pipeline, and we expect user growth to continue moving forward. And here we are at today's itinerary. So didn't feel the need to load this page up a whole lot today. There's a lot more content than what you see here once I fill in the blank spots here. So keeping with tradition, in a second, I'm just going to pass it on over to Steve and let him talk about the overall markets. But I think everybody kind of knows what's been going on here lately. But always like to have Steve's take on that. Then we'll get into the Holly recap. Interesting day for Holly today. In these last two topics over here, we're going to kind of take in reverse today. I just wanted to get them on the screen here. We're going to talk about a little SPAC update. You know, we talked a while back about how to find these special acquisition corporations that kind of do, well, it's not really an IPO, but they position themselves to take other companies public. And there sure are a lot of them showing up here lately. And I'll show you one that we just happen to be in that is doing what we hoped it would do. And there will be other ones that hopefully do this as well. And then we're going to talk about the strategy that I've been mentioning probably over the past couple of office hours webinars. Finally got some good data for you guys to take a look at, and I'll go ahead and share that strategy with you guys before we are through today. So let me just make a couple of adjustments here and we'll get rolling. All right, so Steve, if you're ready to take it, I'll go ahead and kick it over to you and we can let you do your thing here. So you should have the baton now, sir.
All right, stick. All right, welcome to my desktop, everybody. Happy Monday. You know, last week I think I was doing mea culpa, saying that this action kind of got me leaning the wrong direction, and you know, by at least last Tuesday's webinar, I was saying, yeah, I cleared the decks. I just got to get out. I'm wrong. And oh, hold on, our English friend is just chatting away over here. All right. So I spent my time realizing that I was wrong. The moment I realized I was wrong was when we bounced right off this 50-day moving average and popped right back up into play. I kind of watched this area here for any resistance. None of it showed up. The very subsequent day, we closed right back above in clean air again. I said, I'm out of all volatile shorts, ETFs, whatever it was that was defensive in play. I got out and just been kind of setting back up and re-entering a few things over the last few days. And I'll even show you a couple of them. But the point is you can't fight the trend. You can't fight any reason for the trend. If you want to call it for money printing or quantitative easing or whatever the Fed is doing, it's just driving the market higher, and it's being confirmed. So again, there's no bear case to be made. The only thing is there's just a little bit of space here between our comfy rising moving averages and 4 or 5 days of rising price. At any moment in time, the music can stop, wipe it all out with a candle or two, and we can reset back on these moving averages. So no reason to be short. If you are, you're really trying to paddle a canoe upstream of a very strong current. And I'm just proud of myself for getting out and recognizing, because I got a little greedy. We all get a little greedy, thinking, man, if I could just nail the turn here and catch a really big move, which, by the way, I caught a lot of that move in the VIX, right? Great, yeah, but I gave a lot of it back too. So that's just how it goes. So that move could have turned into a big move, and that's when I say I was greedy. You know, I was thinking, oh man, this is really going to turn into something nice here, because I was positioned early, but it didn't materialize. So the point being is I recognized I was wrong, got out, clear the decks, and start moving on some new ideas, and just don't fight the trend. But back to our NASDAQ, same thing. Looks exactly like the S&P. the small caps, the IWM going even crazier. I think a lot of you people out there playing in small cap land, stocks under $5 have been going absolutely bonkers lately. This would be another illustration of the small caps going really nicely. A lot of space in between. You know, some of the things that I'm in that I found setting up again, you know, TGB, you can see the blue arrow right there and the day that I jumped in on these things, because I'm clicking directly from in my mirrored account over here. That's a mining company. It had a great day today. I have no reason to get out of that one. This is one I think you guys need to keep an eye on. Not recommending anything, but you know, AR Resources was showing up on the A table all the time when it had a pretty good short float, and it's been moving higher. It is a resource, crude petroleum and natural gas extraction. Okay, well, RRC is a crude petroleum and natural gas extraction, and here it hasn't really quite had that run that the other one AR had, but it still has, you know, 15% short the float, and it's got a really nice looking cup and handle here thing. So I bought some on Friday, added some more to it today, and have a nice little average. There it is in that one, in the money on that one. Jumped into UAVS again, just seeing a lot of things that are just popping back above their averages and consolidating sideways. This is a crazy, you know, drone play if you're into, you know, hey, if the electric vehicles and the SPACs can go crazy, well, this one would be the darling of the delivery drone services, if you're not familiar, okay? Again, these are not recommendations. These are volatile, speculative plays. This is another one that almost got called for trade of the week, but INSG has a giant short float down here of 40% on my A table. So it's not the trade of the week, but it's in my portfolio. Jumped to some ride again, electric vehicles sideways. So what you're noticing in these things I'm in, none of them are a chase. They don't look like the regular market. They just took their own time and the jump rope set up again. RVP is the trade of the week. We'll talk about that tomorrow, so I'm not going to say much about that today. So that's all I've really got, Jamie. There's no bear case to be made. Just be careful. They can pull the rug on these things at any moment, but that doesn't mean that the trend doesn't stay intact.
Good stuff, my friend. Thank you very much. Let me grab this back here. All right, should have eyes back on my screen.
Mm-hmm.
Yes, I don't think I'm muted.
Mm-hmm.
Okay, good.
No,
All
you're not
right.
muted.
So thank you very much, Steve. And now we're going to do this. Come back over here. And obviously, the market continued today. Let me just get the market real quick. Okay, so to start the day, I do my typical thing. What I would do is consult my compare count window after the first 15 minutes. A lot of you out there know what this is looking for, but if, in case you don't, this compare count window, which you can easily spawn a compare count window from new from the TI toolbar, and it's right up here at the top. And you can make this thing compare counts for inverse strategies. So this one is keeping count, and I consulted after the first 15 minutes of the open of any company capitalized over 4 billion, which is hitting highs and lows with a little bit of accelerated 1 minute volume. And most of the time, this thing will give me a pretty good read as to overall market direction. It doesn't work all the time. It really just depends on what the bias is. And as you can see from the screenshot here, and I usually dump these out on Twitter as well, you can see we had a nice upside bias of 61%. And typically don't really give a whole lot of credence to the bias one way or the other unless we're at 55% or higher. So this one was a pretty decent read today, a good 6% above that 55% level. Now, go back here and look at the opening 15-minute bar, which is, I'll just mark it right here. As you can tell, that's the opening 15-minute candle. Wasn't an immediate move higher. Took a little, looked like we might fill half the gap there. And then just for the rest of the day, once the 10 period is reclaimed, it was just a grind on up to highs once again. So not immediate, but a good read on overall market direction today from the compare counts there. So, you know, gave me a little bit of a realistic expectations today as to how the overall action would finish. So not too bad of a read there. Now, Holly recap time. Not the busiest day for Holly. Let's just get my stats back up here. But if we focus our attention over here on the channel bar, not a bad performance, 1.0. And keep in mind, these values over here are assuming 100 shares per trade. So on 7 trades from 1.0, she's kicking out almost 500 bucks in profit, gross profit today. 2.0 being a little quiet today. 1 trade up 13 bucks, and Neo bringing up the rear. 4 trades for a total of 477, assuming 100 shares per trade. Now, before we get into the Holly recap here, just a quick explanation about the numbers that you see here on my screen and my AI blotter here. Just make sure we can see all the trades here. Now, these totals right here are not based on 100 shares per making 100 shares per trade. These are all based around risking $100 on the trade itself. And then the system is going to get us into the appropriate amount of shares based on the stop loss for that trade. Okay. Now, just so you know where to go if you want to adjust those settings, if we go to Tools and Options and we go to AI Trade Size, this is where you can make those changes. Either go shares per trade, dollars per trade, or in my case, risking 100 per trade and letting the system size it up accordingly there. So that's what all these numbers are based around here. So 2 to 3 things I typically like to touch base on in the Holly recap on these specific trades. Conservative moderate spread. Were there any add-on potentials that just jumped off the page? And then lastly, any trade arounds, which is typically when the AI makes an exit in profit save or reduce risk, or on a stop out, and how the stock reacted after that. So let's just jump into a little bit of the conservative versus moderate spread first here. Not a bad one here on Mara. Just expand this 15-minute out a little bit for easier viewing for you guys. Now, here we have the entry signal, Mara, coming in at 27 bucks right there. All right, we get a nice little lift here. Okay, now the shaded area, the little shaded block here, is the time spent in the trade in conservative mode. Now, you might ask yourself, well, I wonder why Holly felt compelled to exit. Probably somewhere in this candle here. We can see the exit price 28.40, entry price 27. So not a bad move there, okay, from 27 to 28.40. But we can see the reason for the exit, profit save, okay. So we got this stock, we got this entry, we're participating, we get a nice move up. Holly decides to pull the plug on it. And a lot of the times that's what happens when the stock quits going in the direction that it was intended to, just a little breather there. Holly's like, well, guess the move's over. I'm going to pull the plug. Not a bad profit. Okay. Risk 100 bucks, made 100 bucks, kind of a 1-to-1 risk to reward there. Had we stayed in the position until the close, we would have done much better, about 3.5 times better. So when we see the AI making an exit, all we have to do is quickly sum it up and go, has this thing been doing what I hoped it would do? And if the answer is yes, in this case, all we have to do is accept a little bit more risk and ignore the AI's exit to signal because we like what's going on in the chart. And you can see this would have been rewarded today, just being a little more patient. Now, sometimes they don't work. Sometimes they roll over. They might stop out, or you might only get up, maybe half the profit disappears on you. So when you're first getting used to this process, you might want to try the old 50-50 method. You see the AI exiting in conservative mode, take half the position off. In this case, you could have used a break-even stop. It would have kept you in there for the entirety of the day, and you would have gotten to enjoy the rest of the up move. Of course, it took its sweet time. But keeping in mind, let's say we peeled off half here. We're sitting in the rest of the lot with a break-even stop. Never even came close. But a secondary pattern does emerge. It just takes a little bit of time here. So this is something else that ties into add-ons. Right here would have been a great time to add to that position, okay? Because we're seeing an opening range break, all right? Now, typically opening range breaks happen a lot sooner, but they can happen at any time of the day. This one's just not occurring until about an hour and a half before the close. But having said that, let's say we were still in our half lot, we're waiting for this potential event to unfold. We got nice adherence to the 10 period there on the 15-minute, and then finally, boom, patience is rewarded. We could have added to that position, got back in if we sold half, reclaimed that other half, or if we stayed in the whole thing, we could have doubled up on it and enjoyed a little bit more of a move from 30.47 up here till about 32 at the close. On top of that, let's take a peek at the volume. How was the volume in this little guy today? Pretty much well above normal for the entirety, kicking out almost 68 million shares. Volume on the 5 and the 1 minute were percolating pretty good all day. So just keep that in mind. When you have the AI bringing the position to you, we got statistical probability on our side to start the show. We've got volume on our side as well. And then sometimes we have the potential for that secondary pattern to unfold, which allows us to leverage the trade and add more. And the Mara trade had all three of those characteristics in place today. So not a bad trade from, what was that, Holly Neo. Of course, Neo being the more aggressive of the trio. Randy's talking about, let's see what Mara's doing after hours here. Hold on, let's just take a peek here. And post-market, yep, a nice little surge in post-market activity too. So good deal there on the Mara. How's it looking on the daily? Well, look what we have going on here. Okay. Also, it's busting out to all-time highs. So in addition to the beautiful trade that Holly put on and the aftermarket activity, we might even want to watch this one tomorrow. If it sets up nicely on the intraday, it might have a little bit more oomph in it. Okay, so we can see here on DMTK, it did better in conservative mode. Moderate profit is smaller. Not really that much of a spread here in PRU. Not much of a spread here in MCAC. Yeah, there's some spread here since we have 0 in conservative and 44.25. Not a big number, but it is, it's the event that we care about. So we'll take a look at this one. Entry price right here at 24.69, not too bad, little upside swing, and then right back down to the entry line, which is right about where Holly decided to pull the plug. This trade reminds me of me sometimes, right? And I think everybody out there has been through this before. You're in the money, great success, come back down here. We're thinking to ourselves, well, is this thing going to continue down? Because I'd much rather just flat out for, a 0 position here than end up, booking a loss. And, I've been there, done that many times. Steve's done that. And we've all done it a gazillion times, only to have it turn and go your way. Now, what I will point out about this one is, while this is unfolding, you don't know. So we have to consult the daily a little bit, right? And you might be able to identify some levels here that would give you some confidence to stay in that trade. Let's see here, 23.35, and that was pretty far away. But the bottom line is this: I like the action when it came down here and kissed the 10 period, right, and then reclaimed it in the following bar. Okay, so at this point in time, we're just kind of ebbing and flowing around the 0 line. The 10 period could have given us a little confidence to stick in there, and had we done that instead of flatting the trade, we still would have made something. Once it reclaimed that 10 period fast line, it pretty much did not let go of it for the remainder of the day. So not a huge amount of money here, but it's the action, it's the motion in the ocean, so to speak, that is important to point out here. Not bad volume in Oxy, 1.84 to finish the day. So not that bad of a trade. And that's pretty much it for the trade arounds today and the add-ons. Decent add-on opportunity in Mara. Oxy looking like it might be like a Mara. And you could have played a little bit of this break, but you just wouldn't have gotten that much out of it. 25.22 up to 22.50. So just not a whole lot of spread today. Good performance from Holly, just not a whole lot of spread between conservative and moderate. Now the trade arounds, there were a couple of trade arounds worth mentioning here. Fox A was interesting because a lot of the times these early entries, and Fox A was about 6 minutes and 11 seconds into the open, and we all know how that opening 15-minute period can be, and this is the perfect testament to that. Actually, the second bar got us out here, but that opening 30 minutes can still be just as crazy. So we get this buy signal up here at 32.02, stop out in the following 15-minute candle here, or in the same candle, I do believe Fox A, yep, 836 and stopped out at 850, as we can see there. So not even 15 minutes into the trade. But what I like here is after we see the AI get stopped out, always a good idea to come and set a price alert. That's the best way to manage these things so you don't forget about them. See what happens if the stock hovers around the stop loss and the stop loss area acts as a pivot area, or if it just continues to cruise on through. If it continues to cruise on through, well, we never even see it or hear about it again from our price alert. But if it comes back up here and tags it and starts hanging around it like it did for this 30-minute period here, well, then that's when it gets interesting. Okay, got the bottoming wick, got a higher close on this candle, and then boom, we're right back through that stop loss area. And we also have a reclaiming of the 10 period. So on a trade around, when you see the AI get stopped out, if the stock reacts well, which Fox A reacted well around the stop area, and it reclaims it, then we can opt for a trade around trade, get a better price than the original AI with the hopes that it just gets back to the original entry signal. And if it does, then it's always got a chance to do what we thought it would do in the first place. This is a classic second mouse gets the cheese trade. First mouse gets stopped out, you sit there and go, hey, that person got stopped out, wiggles around. This is reclaiming this stop area. I can get a better price than the AI, and then that was the ticket today. So a very good trade around opportunity in Fox A. And once it reclaimed that 10 period, pretty much never looked back. So just keep that in mind. You know, we can take advantage of the AI stop outs, just like back in the olden times when Steve and Andy and I had to go to an office. Instead of an AI, it was an actual person, you know, that we'd hear complaining about getting stopped out. And then we look at it and go, looks good now. You know, I get a better price than that guy, take advantage of his pain. But now we've got the AI for that purpose. So a decent trade around in Fox A. And then I think we also had a decent one in Crocs. All right, so here's Crocs. Notice this one reacted even better than the Fox A. Buy signal here, hems and haws around for about 30, 45 minutes, and then boom. But check out that perfect wick. Didn't stay on there for long. As soon as that candle closed, we got a higher open here, and then boom, could have made an entry here. And if you do play these things, and you have these nice wicks here, then that can define your new stop level. Since we're playing this around the original stop area, you get a nice wick down. Sellers try to keep it down, couldn't do it. It's like that balloon, you know, that was held underwater, snaps back up. We get a nice tidy close on that bar, and then we can easily make an entry, get a better price than the AI somewhere probably right in here, and use that as our new exit. Once again, getting traction back through the original entry and even higher in the post market, as we can see here. All right, so conservative moderate spread, sometimes there's good add-on opportunity, and then playing the trade arounds on the stop hits. All right, Steve, I see you're knocking out those questions. Let me know if I need to circle back or rehash anything in the Holly AI. And if we don't have any questions on Holly, then we'll just get on to the rest of the topics here. All right, not seeing any new AI related questions popping in here. So now let's kind of revisit the SPACs, okay? And for those of you who are not aware of what a SPAC is, Special Acquisition Corporation, which seems to be all the rage and, you know, coming into play in the latter part of last year. They're all over the place this year. And what they are designed for is taking companies public. So it's just a new spin on an IPO, but forming a shell company that's publicly traded, and then eventually hoping to get a deal in which they take a company public. Hey, Chris, real quick here. I don't want to skip your question here. So here's what I'll say about your question. And the question is, how do I set up? Oh, wait. I was talking about Marlins. What is the best way to learn about the AI trading? Well, here's a great place. The live support sessions, the 12 p.m. to 1 p.m. live sessions are also a great place to learn because you can ask questions live. And we've also got a ton of videos on the AI on our YouTube channel. Okay. But of course, the best way to learn from the AI is to watch it every day. Okay. And keeping these three things that I talked about in mind: the conservative moderate profit spread and how you might be able to capitalize on that, capitalizing on things that get stopped out if they react well around those stop areas in the form of a trade around. And then, of course, there's no substitute for just sitting there and watching the AI trade, because it is a great learning tool. Just think about it for a moment. If you had the opportunity to learn from a trader that's successful, that's been doing this for 10 to 15 years, but they use statistical viability for all of their entries, and you got the chance to go sit with that person free of charge to learn, you'd probably take that deal. Now, of course, I know that nobody's getting trade ideas for free, but to be a mentor for that type of to be mentored by that type of trader, nobody gets that opportunity. So that's kind of why we created this statistical model. It's great to spawn trades from in a live market, and it's also a great learning tool as well. Okay, so getting back to the acquisition companies here. Notice that we have developed a special channel, as you can see down here, just for the SPACs. Okay, the SPAC blank check companies is typically what they're called, and this window here I extracted from the SPAC channel, which is showing me a list, and it's updated, of a bunch of SPACs. I can't say that every one is on here because new ones are constantly coming onto the scene. But I can tell you that everything on here is a SPAC. Okay. And so my technique over the past month or so would be to go through the SPAC list and look on the daily for opportunity. Okay. So I just clicked at random on this one, ID. All right. Looks almost just like any other stock out there. Might go up, might go down, averages might come into play, blah, blah, blah. Right. So the key, or the thing that I've been looking for over the past month or so, going back more than that, is just to constantly scroll through the list and look for the ones that are doing this, right? And this one already has gone big time. But just keep in mind, if you were scanning for SPACs and you saw this type of action, which is typically what happens once they come public, but they have not inked any deals yet, they're just in a holding pattern. So think about it from this perspective. If you were able to have found out about IPV and you knew that they were a SPAC, and you're seeing it hover around in this little range right here, even if we were buying the tops of this range, what are we looking at? Around 1024, and the bottom of the range, all-time lows were at 972. You could just buy that SPAC, hope they get a deal, but if it goes down there and prints new all-time lows, you lose a little bit of money, okay? 30, 40 cents, right? And then, of course, you got lucky on this one if you were holding it, because one day it started percolating and it went from 10 and change and topped out almost for a double at 20. So as you go through this list, you're going to find some that have gone and some that have not gone. Not too long ago, well, give me my pointer back here. Hold on one sec. Not too long ago, I was scanning this list. And where'd you go? There we go. Okay. NGAC. Okay. This one just got liftoff today. But as you can see, I've got my daily chart fully compressed. So not too long ago, probably, I'd have to go back and look at my exact execution time, but probably somewhere in that, what did I do to my dot? Okay. Probably somewhere in this area right here is where I saw NGAC, right? And I'm thinking to myself, okay, well, it went public back here on the 8th. Did it open way up here and then come all the way down? Well, if I hover my mouse over the day here, we can see that it opened at 1041. So it opened pretty much at the top of the body of that candle, and it ran all the way up here. Okay. Then it came all the way back down and just started flatlining. So I'm thinking to myself, well, hey, why not? So I opened up a position in our little in-house fund here, and I'm thinking to myself, well, if I get stopped out, the low is 972. I'm buying it in just a little over 10. What's 30, 40 cents to sit in this thing and hope that one day it pops? And lo and behold, I wasn't even paying attention today, and Steve was like, "Nice on the NGAC," and I pulled up our account. I'm like, "Yes, it's working." So come to find out, they cut a deal today. They're going to take an electric vehicle company public to the tune of about 350 million bucks. I forget the name, but it's electric delivery vehicles for the service industry. But as we all know, that is the rage. The electric vehicles, all the battery manufacturers. So it's good to see one actually work. And it got halted, opened up, cycled down a little bit, and then it was continuing to get a little bit of traction in the aftermarket. So that's what I would recommend to you guys. Go to the Blank Check Company channel. And whether you go here and watch the list or you come over here and just save the list to the cloud so that you can make it part of your own layout, I can tell you this, based on today's actions, I'm going to be looking for some more of these. I know Steve's already found a couple that are flatlining, but that's what you want to do. The name of the game here is pretty simple. You just want to go through and find some that look like
I'm
they're a
not
nice
much of a,
base.
I don't understand some of the nuances and other stuff. I just am a chart guy. I look at price action. I let that tell the story. I flipped through all of them that were stuck around $10, and the only one that really stuck out to me was FPAC.
Yeah,
Kind
let's
of
take
like
a
the
peek.
action in that one. And I like the way the volume kind of came in. I like the way it's kind of come to life and just kind of looking to maybe do something. I don't know. So I thought, I'll throw a little bit of money at one of these. And based on what I saw, I thought, all right, well, maybe this thing will sit for a week or two and see what happens.
Yeah, and it's funny, and there's no rhyme or reason, but the ones that I do find, they seem to all be around the $10 level. It seems to be, I don't know, some kind of little weird number. Not saying there's any rhyme or reason to it, but yeah, it's nothing complex. You just find the ones that have been basing out. As Steve was pointing out here, even if we got an excursion down to this level right here, that wick from the 27th of August, you're looking at 972. You're looking at a point risk here. Okay, even less if you're using this level right here. So these SPAC plays, some are going to go, some are not. But at this point in the game, in the SPAC game, you can get in and take some pretty decent risk for some pretty handsome reward. Right. Okay. So as I said earlier, these things are coming to market hot and heavy. There might be additional ones out there that are not necessarily on this list. WPA, this one kind of, I just pulled this one up at random. Okay. Yeah, it's got a little bit more history, but I think you guys get the gist here. So wouldn't be a bad idea to start scanning the old SPAC list and finding some low risk potential poppers there. Okay, let me do a little time check here. Yep, we should have just enough time to get through this last little bit here. So rewind about 3-4 office hours webinars ago. I was talking about attempting to find a swing strategy. And initially, I was trying to find something where the entries would come in the last hour or 30 minutes of the day and looking to predict the gap so that we could just get out on the next open. And, it was a decent idea. But through my scanning and playing around with certain alerts, that idea morphed into a swing trade strategy with a hold time of about 3 days. Okay. And sometimes that's how the game is played. An original idea yields fruit, but it turns into something other than what you originally thought it might be. And that's kind of the way this one has worked out. Now, let me go ahead and pull the strategy up. It's already up right here. We briefly spoke about this one, but I didn't hand it out last week. Originally, let's see if I have got that one on my desktop here. Okay. Originally, I was looking at something like this. Well, actually, it wasn't that one. Let me look in my cloud here. Hold on one sec. My cloud is a little sluggish today for some reason. Okay, I don't know what's going on with the cloud here, but it's not pulling up. In any case, I'd originally designed something that was looking for entries in the last 30 minutes with the intention of getting out on the next open.
Mine's working. Weird.
Okay. And I had called that one. Let me see if I refresh here. We'll get my
Yeah,
cloud
mine's
back here.
working. Do a reset.
Yeah. Okay, there we go. Now let me see. Got to scroll back here.
Where do we get that SPAC data anyway? Is that just a data feed that we're paying for now? Or
Yeah, I mean, I think it's just coming through the regular data feed.
okay.
So this is what I was working on initially. Let me see the hold time here. Right. So notice here, I was getting out at the open tomorrow. I think my entry time, yeah, last 30 minutes. Want to get out the open. You know, the old scalper in me wanted that immediate gratification with an overnight hold, while at the same time trying to find something that was active that would benefit the crowd that is limited by the pattern day trading rule, you know, because that kind of puts a kink in your armor. If you don't have that account well above 25,000, you can't make those intraday trades. So I was just trying to find kind of a surrogate that would be profitable. But as I scanned and kept analyzing certain things, I thought to myself, well, what I'm finding now, and by the way, in that original strategy, I was finding a lot of good results using this alert, running down now, which looks at the 1 minute time frame for quick bid increases. Of course, the opposite alert is running up now, which would mean quick bid increases. So I'm thinking to myself, well, this alert here could help me get prices more in line with the back test, because we're always taking slippage, right? Especially if we're using new high or running up, we're going to take even more slippage. If it's already running up or hitting a high, by the time you get to it, make that decision on a manual perspective, or even if you're using automation, slippage is still going to be fairly, uh, well, big, I should say. So that was the original idea is, well, if I'm getting them on pullbacks, then slippage is going to be better. My expectations can be more in line with what I'm seeing on the back test. So that's just a little history about why I'm using the running down now alert. And I also like this strategy too, because the only uh, optimization that I ended up doing, and by the way, just because I'm only optimizing with 2 additional filters doesn't mean I didn't have to do a whole lot of scanning to arrive at this conclusion, which also falls in line with the simple is better motto that I really find valuable. The more simple, the better. So if you take out the position and 20-day range and the 60-minute RSI filters settings that I have here, all of the other alerts, with the exception of price, I will say that the optimization came in the form of max price, position in 20-day range, and position in 60-minute RSI. All of these other filters were here already, which were just basic variables of my new T high, new T low scanner. But the main theory here, or the main topic, we would have to say, is this relative volume. Okay, stocks that are experiencing higher than 4 times on the relative volume level, something's going on with them. And typically it's not just happening on one day and then we're done. That's what this scan has shown me. So let's just get into the meat here. Let's get the back test up. So we're starting to take trades 15 minutes after the open. We're going all day. Timed exit at the open after 3 days. So for example, if we made entries today on Monday, we're going to hold Tuesday, Wednesday, Thursday. We're going to get out the open on Friday. Okay. Risk management. If you're holding overnight, there's not really it doesn't make a whole lot of sense to factor in profit targets or stop losses, because you can't control that stuff. And we all know how the algorithms work on the opening 15 minutes anyway. Okay, so we're just looking at results based on the 3-day hold, slightly over a 3-day hold. We're back testing. Well, I'll show you the 62-day back test, but I designed this around the 40-day back test, which is about 20 calendar days, or excuse me, 20 trading days in a month, so 2 months worth. So Let's get the results up here. And the good news is I started running this strategy in our simulation mode on the 3rd. And exits for those positions on the 3rd will begin tomorrow. So we've got a full load here of trades to look at. So that first 4 days is just loading everything up. And then a little over 3 days after the 3rd, which will be tomorrow, we will exit those positions and then we'll have new ones pop up. So every day at the open, you'll just be kicking out or getting out of the ones that were generated approximately a little over 3 days ago. All right, hamsters, kick into overtime here, get this scan done. And one day I'll have the Jeopardy music.
Maybe I should learn that.
Yeah, you can just play it on the keyboard over there, Steve. We could add the Paul Schaefer element to the, to the webinar. Good Lord, it's teasing me here. Come on.
Jeez, that was so close. Come on.
Okay.
Heck.
All right here. Okay, so notice, of course, we've been listening to you guys. Everybody's like, yeah, we would like to learn more about Brokerage Plus and automation and all that good stuff in some of the webinars. So keep in mind, this is a strategy that might produce some decent gains in a commission-oriented environment, but I think it's really designed for the zero-com environment. And hopefully, if things go well for the remainder of this week, I'll actually be putting this thing live in the E-Trade environment, which is commission-free. So just wanted to throw that in there. So if we look at the daily here, over 40 days, not too shabby, okay? 1, 2, 3 losing days in the past 40 trading days. Now, I went back and I've looked at correlations. Okay, when the market takes down days, how does this strategy hold up? So if you look at the red days here, I went ahead and I've pointed those out over here on the chart. Okay, each one of this losing day right here was this day. And in case anybody can't see, I'm talking about this line right here. That corresponds with that losing day. This losing day is right here. And this losing day is right here. Now, on these big red days, I don't see any losing days. So that's telling me that, right now, of course, this might change in the future, but right now, in this smaller cap world, we're not seeing this strategy deviate a whole lot, even when the market has a down day. You might see little performers or no trades if there were no trades from 3 point whatever days back. But all in all, it looks like it's going to hold up pretty well until something major changes in the market. Now, what I've done here also, since we're in a zero-com environment, you're not seeing anything here, okay? But I am building in slippage because that's always a good thing to do. So I'm saying, okay, 3 cents on the entry, 3 cents on the exit for a total of 6 cents of slippage, just to give us a little bit more realistic expectations. Obviously, if we get rid of this, we just have the solid equity curve here, okay? Now, another word about how am I allocating capital in this strategy? Well, just like what you see right here, $200 per trade. Because if you're really playing the statistics, okay, you got to be in everything. And, before the zero-com environment rolled around, I didn't really plan, I didn't go seeking for these types of strategies because, after commissions, it's probably going to be a losing proposition, but not now. So now let's take a look. After the load up since the 3rd, what are we looking like in simulation mode? Okay, so these are all of the trades since the 3rd. Let me just resort here. Okay, so we can see here all the trades from the 3rd. That was the first day of loading into the positions, and this is how they're currently doing. Then we had the 4th here, 5th here, 5th all the way down to here, and then today we had the 8th. Okay, So far, so good. I mean, I don't want to get too excited just yet, but these are some pretty impressive stats. Now, I do realize the market's been up, up, up. But as we were just taking a look, even when the market's not just ripping to all-time highs, there is some meat on the bone here. So right now we're looking pretty good. Average winning trade 1909, average losing trade 288. Win percentage thus far 78.6% with a profit factor of 26.25. So tomorrow on the open, all of these trades will be kicked out. Okay. So, barring a huge gap down or whatever might happen tomorrow, all of these trades will be booked. Okay. On Tuesday, then all the fourth will be kicked out. And of course, new trades will come onto the blotter tomorrow, so forth and so on. So new trades will be constantly coming in. And then the third gets kicked out tomorrow. The fourth gets kicked out Wednesday. The fifth gets kicked out Thursday, so forth and so on. So also keep this in mind. The third appears to be the busiest day thus far. Yeah, I think so. The fifth and the fourth are both pretty busy. So you have to have Brokerage Plus in order to accurately execute the strategy on the exits. If you look at the times here on the entries, let's see here. Let's just take a little peek. The gaps here are probably big enough for manual entries. But when you got to get out of all these trades right on the open, not so easy, okay? One at a time, two at a time. It'd be impossible for you to get out of them in a manual capacity. Now, having said that, since all of these trade instructions are articulated into Brokerage Plus, if I come over here to my orders, and that's from today, so if I say live, okay, these are all of the exit strategies. So we can see here, let's see. I forgot how to sort these. Let's just go back to our entry time. Okay, so here are all the trades for the third, which we'll see if things go smoothly tomorrow. So you can see right here, all the trades from the third, they're queued up to get plugged out tomorrow, which is the 9th, right at the opening time of 8:30. Then we've got all the orders queued up here to get us out on the open from the trades that were initiated on the 4th on the 10th. Okay, so hopefully, fingers crossed, all of this works as it should tomorrow. But let's say for a moment I didn't have all these orders. Well, with Brokerage Plus, one of the cool things is if I had to do this, well, I can't say manually because I'm not doing each and every one manually, but it would be possible if I didn't have those standing orders just to go like this, limit out, set my delta, boom, all these orders go out at the same time once again, and that's crucial for a strategy of this nature. All right, ladies and gents, so far so good. Now, a little bit about the optimization. Another cool thing about this is that maximum price, okay, which the optimization led me down that path. It just jumped out. It said, you know what, stocks $14.99 and below do quite well with this strategy. How long will it last? Don't know. But I told you guys I'd rerun the back test here for the full back test period, and what you're going to see is more of the same, just more winning days. So it's pretty exciting to be in the markets at this time and having technology of this nature available to us. With the advent of zero commissions, a lot of strategies that would not be feasible are now going to be feasible. And this is just one of the first ones I've stumbled onto where it actually looks like it will work in a live market. I've examined the spreads on these stocks. I think the biggest spread that I saw was 15 cents, and that was on Siebert, SIEB, which has just kind of been a, or is it Siebert? Yeah. Siebert's come down significantly from its top. I think that's the biggest spread that I've seen, about 15 cents. But with these lower price stocks, you can use some pretty aggressive deltas and I don't have to worry about, eating big spreads on the markets. But I'll probably start this one out in the live environment, probably with a 9-cent delta, a negative 0.09, see what happens. ETA on what exactly, Matt? The readiness of e-signal? And while the scan's going, I would
TD
like,
Ameritrade.
yeah, with TD Ameritrade and E-Trade, it's kind of a toss-up right now. I don't want to say one or the other because I don't know. I heard from the developers that E-Trade is a little bit further along than Ameritrade, but in the development world, things change. While the scan is completing, I also wanted to point out another thing about the strategy. All of these positions, we're only allocating $200 per trade. Okay, notice the share amounts here. Okay, $200 per trade. So when you look at these gains, if we were allocating $100 per trade, that'd be up 50%. So just divide by 2. GHL is currently up 25%, 23%. These are some big percentage gains. And it seems to be happening with these smaller dollar stocks right now in this capacity. So also notice my exposure here. In 42 positions, I'm only in $8,500, $8,500 worth of positions. Okay, let's say the market took a huge gap down today. Let's say I lost 10% of these, of my exposure in one fell swoop. Well, $850 is not fun to lose, but it's a reasonable thing in a worst case scenario, right? And so that's the beauty of the strategy, is that it doesn't matter really what the stock price is in the long term. Even if these were higher priced stocks, if I'm only in $200 worth of Amazon, I'm only in $200 worth of Amazon, right? So in the zero com world, this is going to make the statistical world a lot more accessible to us, because we can be in 40 trades, we can be in 100, we can be in 200 trades, and we don't have to overcome that commission. Because think about it, 42 trades in, 42 trades out, that might be 80, 100, $150, depending on where you're trading, or much higher. So, in 4 days of trading, I'm up 3x what my average allocation per stock is. Over time, I'm probably going to be able to notice some correlations about, hey, when it gets up to this level, it might be good to take some off. But that is one of the comforting things about this methodology of trading, is I'm long, I'm with the trend, but I'm diversified 42 times with statistical probability on my side. Not to mention no commissions. So, moving forward, this might be, a good technique to employ, not with just this strategy, but many other data sets out there that might show us the exact same thing. Let's see if that backtest finally completed here. Okay, so now we're looking at the 64-day trading history. And you can see it's pretty much lining up with those losing days that we had up here, right? 1, 2, 3 losing days in 40 days. 1, 2, 3, 4, a few more losing days get tacked on, but we also have additional winning days as well. Is there a filter for bid-ask spread? Yep, we do have a spread filter in there. But typically, what you have to understand is smaller dollar stocks exhibiting 4 times relative volume. A lot of the times that means the spreads are going to be smaller. That's not to say that some might be bigger from time to time. But typically, when we got that volume in there, we're going to have smaller spreads as well. All right. So what I'm going to do here, ladies and gents, and just keep in mind, you can probably find some good trades off of this guy, but don't just jump in blindly. Watch it for a while, see if you feel comfortable with it. But let me just make sure I'm about to hand out the right thing here. Let's get it back to 40 days. And just remember what I'm saying here. This is really designed for the zero commission environment using Brokerage Plus. Does that mean you can't find good trades off of it from a manual perspective? No, you can. But when you're picking and choosing as opposed to taking everything, well, that's playing a different game than the statistical model. Ooh, I've went 2 minutes over, so let me get this link out to you guys, and just remember, watch it, play around with it. Let's see if it continues to hold up. And we'll revisit it on the next office hours. Okay, that's the right one. Make sure I'm on real time here. Okay. And that link has now been dropped into the chat panel. And I want to thank you guys for popping in. I hope you enjoyed seeing the different topics today. Watch that strategy. Let's see if it continues to hold up. Steve, any closing words before I let everybody get back to their day? I'll take that as a no.
Nope, that's it. Just my hands are tired.
I know where you're going right after this. If I lived there, I'd say pick me one up too. But enjoy that, Steve. Thanks everybody for popping in. Hope you enjoyed it, and we'll see all of you guys tomorrow. Have a great day. Bye-bye.